Hi, Luca. Welcome. Very
Hi, Sam.
excited
How
to
are
have
you?
you. I'm good, thank you. Thanks for joining us this year. Shall we start with your story? You had this fascinating story moving from traditional finance from Morgan Stanley to MakerDAO and now founding M0. So, what drove you to focus on this infrastructure layer of the money itself? And what was that the critical moment when you realized that the current system need to be rebuilt?
I think as always, it's easier to connect the dots backward. When you are in the middle of it, you just do the things that you enjoy the most. But it's good to look back. There are a few reasons I think that caused this transition on my side. I've been focused my entire career on financial services, right? I used to be a financial institutions banker, a consultant for financial institutions, and investor in financial institutions. So I knew money transmission intimately, more than products built on top. And for a very long time, even during the fintech revolution, so to say, the way money is created in the first place, like the hardcore engine of money never changed, right? There were good front ends on top, but the core remained the same. And I think DeFi, my encounter with DeFi and MakerDAO was the first protocol I got involved in, was the first time I had this realization that somebody was really trying to recreate the checks and balances that are composing our financial system from the ground up, and it was very, very fascinating. And there is also a personal side to the story. At that time, this was like 2020. I had free time, fortunately or unfortunately. I am a cancer survivor. I was diagnosed with blood cancer actually the first week of COVID lockdown, which was an interesting um, let's say, an interesting timing to go through something like this. So I had to step out of work for a few months to cure myself under chemotherapy. And at the time, I was spending more time in front of the computer, and I was studying more what was going on in the world of decentralized finance. And I also started to write. I started to write and publish a Substack called Dirt Roads that became very respected in the space. Out of isolation, probably nobody knew. And then things went very fast. When I recovered, I decided to dedicate myself entirely to this new sector where I saw immense potential. I started to advise some of the largest funds in the space, continue my research, participate in some of the largest protocols, including MakerDAO. And then at some point, I had the realization that these protocols were early day attempts, but they were not ready to scale. And with Greg, who is the other co-founder of M0, and a third founder who left earlier this year, we decided to found M0. And then we have been building head down since then. So like a lot has happened in the last 5 years of my life.
Yeah, very inspiring story, Luca. Yeah, and stablecoin is one of the hottest topic this year. And on the market side, it has grown to over 227 billion. And but still, I think the problem that you mentioned in the beginning is still like dominated by like centralized player like Circle and Tether. And just for the context, for the audience, imagine that 80% of all the digital payments are controlled by just two companies. So that's the reality of like today that we have. So Luca, what's the fundamental problems that you see of this concentration problem that is kind of create the problem for users, and why should user care if we want to decentralize it? Yeah.
Yeah, I think there are a few aspects, but I I think that the stablecoin sector is evolving. First of all, like stablecoin, as you said, is a very hot topic because it is very clear that building on digitally native rails, it's simplifying our lives. It's moving really financial services into the internet era, while financial services were really sitting behind. And many of us have worked in financial institutions, so we know for a fact there is very, very different way of doing business still. But in this early phase of the life of stablecoins were used for very simple reasons, and the simple versions of stablecoins were good enough, and there were two players that were serving their purpose, but with time these players became very, very big. They became very, very profitable. I don't know if the audience knows, but Tether makes more profits than Goldman Sachs, which is incredible if people thought about it like 2 years ago. Um, but that's the reality. So I think that obviously nobody wants a sector which is where money is controlled by two players only, and especially when this sector becomes global and much bigger. I actually wrote a piece that I discussed with some central bankers who reach out called the network theory on money recently, that discusses money topology and the risk of concentration of signal in a few players. But I think there is something else that is changing, that is evolving, and this is where M0 is playing also, is stablecoins are not a payment tool. Stablecoins are a platform, like is a technology platform on which financial services can build products. So if you want to have a platform, obviously a platform needs to be more open, more accessible, more fair in distributing the share, the economics share. So there will be an evolution with more players coming, more traditional player wanting to issue stable coins, and more distribution partners or applications willing to embed those stable coins in what they do. The system will become more open. And this is also the origin of crypto per se, right? It's funny that crypto was born as a non-custodial, permissionless, decentralized ecosystem, and where the vast majority of the money is actually managed by one company. It's kind of weird. So I think that the sector will evolve with the evolution of the product itself. Stable coins are becoming more platforms, technology platforms to build financial use cases on. And now that the number you quoted in terms of stablecoin float is actually larger now, I think it's more than $250 billion, will probably go into like the trillions in the next few years. So we are really looking at massive paradigmatic shift in how we manage money and how money is embedded in technology, and stablecoins will play a big role in it.
And you also have described MCO as the offshore dollar market for the digital age. So for the audience, just for context, so the offshore dollar market is currently like trillion system where dollar are held and traded outside of the US banking system. So can you walk through your analogy of like creating this digital platform outside of the US? And
Yes,
what's
I can, and
the
I also
sorry.
yes, and I also want to give an update because things have changed since we made that quote on the good side, on the regulatory front. So first of all, as you were suggesting, there is a huge sector, a huge market, currency market called the offshore dollar, the euro dollar market, and that has nothing to do with Europe. But these are the dollars that are originated and used outside of the regulated US banking system. Nobody knows how big it is because it's very fragmented. You mentioned trillions. It is. I think the estimates are between, I don't know, 7 trillion and $20 trillion. And stable coins like Tether, for example, are great players in this space. They aggregate liquidity in this offshore dollar market and make it way simpler for players outside of the US to transact in dollars. And who are those players? I mean, this could be retail living in high inflation countries, but could also be companies that transact in dollar denominated terms outside of the US, or financial institutions that hold some of their balances in dollars. Stable coins are great for this because they're global, they are easy to move, they are atomic in their settlement, so the counterparty risk is way lower. People who have been sending money cross-border, they know how painful it is, like using the SWIFT system. When you send money, it takes a week. You don't know how much you're paying. Sometimes they lose your money. It takes another week to find it. It's really like medieval. So stable coins are great for this. The reason why most of the stable coin players started offshore is that onshore, let's say within the US and also in Europe, the regulator was way more protectionist vis-a-vis traditional banks to give the ability to stablecoins to grow. This, interestingly, has changed in the last few months. So people know probably that under the Trump administration, the US are actually passing stablecoin regulation that gives the ability to stablecoin issuers to issue stablecoins in the US without folding on the banking sector, which is a big, big change. That means also that stablecoins will not only be most probably offshore and also M0 offshore dominant players, but also replace some of the traditional banking system onshore, within the US soil, which is very big. So how we want to play it at M0 is a bit different from the incumbents, from Tether, for example. I think that what we want to do is create technology that allows issuers to actually issue high quality, very transparent digital dollar form. But the issuers are not the distributors. Like if you are a bank, you're not necessarily the fintech creator of the applications that actually people use. Like, I don't know, the P2P applications, the digital wallets, the exchanges, or whatever, like the e-commerce platforms, whatever you want. So what M0 is trying to do is creating this connecting tissue for issuers to issue of a digital form of money, fully transparent. And on the other side, applications to actually take this money and embed money in their stack just with code. We were focusing on the offshore market, but most probably we will have onshore issuance in the US as soon as the regulation passes in the next few weeks or months.
So looking forward to more progress. Yeah, and you probably know that our theme this year is building through cycle, and we have seen a massive ups and downs in the crypto markets lately, but stablecoin on the opposite, kind of like growing during the downturns, and people want some kind of like stability during like volatile markets. So how do you see that impact your protocol design and market adoption? And what does it mean to build the infrastructure that works in both the bull and the bear markets?
Yeah, it's interesting. I think that what is happening now is that we are confusing the investment asset class with the technology. The same happened with tech, right? When you were in the 90s or early 2000, I remember, I'm 42, so 2001, like at the top of the tech bubble, I went to university, right? And we were confusing tech as an asset class with the technology behind it. And the asset class was very volatile. People were investing in tech stocks, were gambling on tech stocks to go like 1,000% up, and this was very, very volatile. But the technology behind it that was being created was real. And over the medium term, this technology completely transformed the world we live in, as we know. I think the same is happening in crypto. The crypto assets as an asset class to invest in are very volatile because the market gets excited or depressed. But there are teams that are building the technology behind it that is going to transform the world in the same way the internet has transformed the information age. And this is how we approach it, right? Like M0 has raised significant amount of capital for long-term building. We are building financial infrastructure from first principle perspective. We think this financial infrastructure is going to change the world and will make of M0 obviously a valuable project over the medium term. But we are trying to stay away, for example, from the hypes of the retail market. So M0, for example, while M0 is governed by utility tokens, doesn't have listed tokens yet on exchanges. We are trying to protect the morale of the firm against these bull and bust processes. But in my opinion, like stablecoin is the first example in crypto of a technology that is really acyclical, right? Like, as the stable coins have been growing in the bull market of crypto thanks to leverage, they've been growing in the bear market of crypto. They will continue to grow because it's a technology platform that makes sense. So we think that this is one of the areas in the sector which is less sensitive to to cycles. Still is, right? But definitely less than others.
Yeah. Can we dive into the technical architecture of M0 a bit? So one of your unique tech architecture is the multi-issuer model, and that is very unique compared to like the centralized stablecoins model and other decentralized approach like DAI. So in simple terms, instead of one company issuing all tokens, you have multiple minters who can all issue the same tokens. And so I want to understand how does it work technically? Like how do you actually have all the minters issue dollar that work everywhere and can be like exchanged across like jurisdiction?
Yes. Interestingly enough, there are multi-issuer models already in the world. It's just like they're not very transparent. Like Circle, for example, doesn't have one issuer. Circle has two issuers. One is in Europe, the other one is in the US. They issue the same token. It's just very, very, very cumbersome to understand what is issued where. So what M0 wants to do is the M0 wants to be this platform that allows different issuers very, very transparently to issue a same form of liability, a same token. Now, through technology. Now, how do we achieve this, and why we think it is important, and how we ensure that the quality is preserved across the network? I think we achieve this by enforcing the same standards for issuance to all the players that want to issue into the M0 market, so to say. So the standards are very, very strict. Currently are like to issue, you need to provide an over-collateralized reserve of US short-term treasury bills. So to issue $100 million of M token, which is a wholesale stablecoin that is issued by the protocol, you need to pledge $102 million worth of short-term treasury bills, US, under 6 months of residual maturity. And every issuer needs to provide ongoing proofs of reserve every day to the protocol by a third-party validation that the reserves are there. This allows, like, certainty across the network that the quality of the reserves is the same. Why we think it is important and what is going to happen on the issuance side. So I think that what is important is that we are diversifying centralized counterparty risk by having more than one issuer issuing. But also, we can have access to in different markets if some markets require issuance to be done in their territory and not outside, with the reserves sitting in their territory. But at the same time, we can achieve this without breaking liquidity and fungibility of the token. The most important thing in money is interoperability and liquidity. We cannot really live in a system where there are like 1,000 different forms of money and they are not really the same, because we're gonna get crazy. Like in the system we're used to, every bank has de facto a different version of money, because every bank deposit you have in a bank is different counterparty risk profile, but they're all interoperable, right? If I send money from my bank to your bank, it's the same dollar or the same pound or euro or Thai baht or whatever. So I think that that interoperability we want to achieve from the protocol. We think also that in the long term, issuance itself, which means parking the reserves and creating the digital version of the reserves, is going to be a very commoditized business. It's going to be a business that creates, single digit basis points or like 20, 30 basis points of profit. Is going to be done only by technology with some licensing. Most of the fun is going to happen in the connectivity downstream with the people who use this money. So that's why we want. That's also why we created the protocol the way it is, because we want to make it future-proof. We think that the issuance of stablecoins will really radically develop. Currently, how does it work? Like, you are a company, a regulated company, you have a balance sheet, the regulator is checking your balance sheet, and you create a token, which is a digital version of a liability, and you distribute it on chain. So it's very old school, right? Most of the technology enabled stuff is happening with the token. I think also the issuance can become way more advanced, right? You can have this done in an automated way as long as the securities that are composing the reserves exist in a tokenized form, which is happening. So I think this is going to have a lot of fun on that side as well. But so for example, more pragmatically, currently M0 has around $250, $270 million of outstanding issuance. We started like 6 months ago, so we've been growing quite a lot. The issuance is entirely done in offshore with a BVI issuer. But now we are waiting for the legislation in the US to be approved, and we will have the first issuer minter in the US as well that is going to issue using similar standards for the US market for those that need to actually acquire stablecoins in the US market.
Yeah, and another disruptive component of M0 is your revenue sharing model. You already mentioned about Tether earning more than Goldman Sachs. That's by just keeping yields from all the reserves that they have. And that's the area that M0 want to flip. So can you share a bit about the model that you want to share with the yield with earners, especially the company and platform that want to build on top of M0? How would they benefit from this model?
Yes, absolutely. And yield is an important feature, of course, but is one aspect. I think the most important aspect is, more general aspect is control. And I will make an example here. So let's say that you want to create a credit card app for your phone that is based on stablecoin rails. So you can actually, behind the scenes, who is the technology that is managing your balances are stablecoins. There are a lot of those players now, right? Some are also partnering with us. Cast, for example, is a big player, big in Asia as well, and they're partnering with us. Now, if you are using USDC, for example, or USDT from Tether, you are giving up entirely the control to that issuer. That means that the issuer is keeping all the money for the reserves. The issuer is deciding what is blacklisting and whitelisting, the compliance, and maybe the requirements for a player in Singapore are not the same requirements for Circle who sits in the US, right? You are giving control over additional features, the brand, and many other things. So the stablecoins are today, the centralized stablecoins are not programmable because they're only programmable by the issuer, not by the application. And we think this is wrong. So we think that the entire control of how a stablecoin, how the digital money behaves, should be at the distribution network. So that you are a distributor, you can actually take M, which is a wholesale stablecoin that is created by the M0 protocol, and you can extend it, you can personalize it, and you can control everything of it. You can control blacklisting, whitelisting features, you can control the brand, you can control other behaviors, and you also can control the yield distribution. So the protocol is streaming down to approved partners, so to say, the vast majority, currently the totality of the underlying reserve yield. And then this distribution partner can decide how they want to bundle this. They want to pass it to their users. They want to create some sort of yield products for the users. They want to keep it entirely for themselves, etc. They want to use it to incentivize certain actions. So we want to give total flexibility on the control of the behaviors of the money, including the yield to the distribution. And this is very compelling. And again, I stress control because yield is important, but there are so many other features beyond the yield that are important for somebody who actually welcomes digital money on their platform. And so that's what we're trying to do. We want to give like a toolkit to distribution partners to fully control money when it sits on their stack, and not just to forgo the control and the economics to a third-party issuer who is not doing most of the work. They are doing most of the work.
And if this model works well, do you see incumbents like Circle and Tether trying to like provide flexibility or give control back to the partners or like the users? Or what would be the key technical barrier that would stop them that M0 already like built. Yes.
So there are technical and commercial barriers, and these players are very different. So Tether, for example, is a very different business. Now, Tether was very early here. They have a very strong brand. People are using Tether because they want to use USDT. They have a big liquidity network. People are not using Tether for they the retail users are using Tether. It's a great position to be. That's why they will keep most of their yield. That they also want to stay outside of the US. They really want to dominate the offshore retail market. I don't think Tether is going to pass the yield down anytime soon. They don't need it. They can do other things, but I don't think they do. They can, I mean, and they will continue to grow, and they will be a very profitable business. But obviously, the sector will be way bigger than that, right? Like currently, Tether is, I don't know, 70%, 60% of the market. In my opinion, this market is going to 10x, and Tether is going to be 20%, 10% of this market. Still great company. With Circle is different. Circle already does that a lot. So Circle is already giving back a vast majority of their reserve to big distribution partners. People know now that Circle is public that a big chunk of Circle's revenues goes to Coinbase. So all the USDC that sits on Coinbase, the revenues are Coinbase. The same for Nubank, the same for Binance. So Circle is already doing it, but in a very old school way with like contracts, paper contracts for very large distributors. What we want to do this, like we want to do this entirely with code, and we want to do this for everyone. So any type of player that wants to build an M0 network has full control from day one. They don't need to talk to us or to our lawyers. They can do this entirely with technology. So on the traditional players is I think it's difficult for them to do it because they don't really have the technology to do it. They have a very weird legal setup where it's difficult for them to do it, but most importantly, they don't have the intention to do it. Their business model is built around something different. We see some more traditional players trying to go that way. For example, Stripe has created their own stablecoin offering with this idea of revenue sharing, but also like their technology is not really, let's say, crypto native. It's not technology first approach, but their attempt is in that direction. So it's going to be interesting to see how large players are approaching this control sharing, revenue sharing model with their partners.
Yeah, and next I want to talk a bit about your fundraising and investor. You have raised 57 million from top tier investor, including the large market makers like Galaxy and Wintermute. So how important is it to have like alignment and support from the market maker in your protocol? And how do you see this participation in the funding side signal about the market adoption potential?
Funding is very important. I think if you want to build something for the long term, you need money and you need to have like good partners. So we curated our cap table from the very beginning, and our cap table includes, as you mentioned, some of the largest market maker in the world, like it's Galaxy, Wintermute, but also GSR, Caladan, some of the largest crypto investors in the world, like Pantera Capital, Rode, Parafai, Standard, and traditional fintech large investors like Bain Capital, Air3, and a few others. We think that this combination is super important because every investor understands different things. Market makers really understand market structure and liquidity. Traditional fintech investors understand how to scale tech companies, and crypto investors understand crypto and have connections with the ecosystem. So this has been very, very important for us. And the size of the rounds has been important for us as well. This is not going to be the last round, most probably. Something is cooking for 2025 on the fundraising side, but soon we will share a bit more. So it's very important. On market makers, we've been working with market makers very closely, especially with Galaxy. There are a lot of things we can do with their businesses. They can use our product. They can provide liquidity. And I think these guys have a more flexible balance sheet compared to traditional venture investors that they invest in equity and token form for the long term. So having a very diversified pool of capital providers is very important for the success of a business, in my opinion.
Okay, we get back to the milestone topic later, but I understand. We understand that you want your vision. One of your vision is to become CBDC coexistent, and you already mentioned speaking to like some of the central banks. So, but at the same time, a lot of CBDC projects are advancing very fast this year, and you have mentioned that it's not gonna compete. So, and how do you see this coexistence like playing out, especially in the region like Southeast Asia, the offshore markets?
Yeah, absolutely. I believe in the advancement of CBDC projects, and I believe in the coexistence between public and private, and I explain why. First of all, CBDCs ultimately are some new iteration of treasuries. What I mean is that it's ultimately is a new money market instrument that is digitally native, which is way better than having a treasury bond sitting in an SPV with an IOU, which is digitized, but it's still like a secondary claim. So I think CBDCs will absolutely replace wholesale money repos between central banks and commercial banks or private issuers and just do the connectivity between the public and the private. So I absolutely welcome those efforts from central banks, and I think these central banks will continue to build in this front. At the same time, apart from certain exceptions, like China probably is a big one, but I think there is always been a very clear divide between the private sector and the public sector when it comes to money issuance and credit creation. It's very difficult for the public sector to substitute itself, to inject itself into the role of private players to distribute money, deal with customers, and allocate money, etc. There are a lot of like adverse effects and moral hazard that happen all the time, as we know. So we think that this is absolutely going to continue. You will have private networks that actually embed CBDCs as their reserve asset, so to say, and then enhance their functionality and interconnectivity for the private players. So I strongly believe in this coexistence. Now, if you look at what was happening in the past, you had the central banks behind the scenes, you had the commercial banks that are were the distribution partner, let's say, to deal with the public, and then you have the public. Now we will still have the public, we will still have the central banks, but then the role of the commercial banks will change dramatically, and I think will be unbundled. You will have technology, front-end technology and back-end technology to manage money, which is going to be less monolithic than what commercial banks are seeing today. So in my opinion, the big part of the market that is going to be revolutionized is the part in the middle, which is the commercial banking distribution model, which is going to be more technology. So like the private leg of the private public partnership will change significantly. So I think there is absolutely a future for the coexistence of public versions of money and private versions of money, as we have seen in the last 100 years around most of the world.
Right. Since we already touched on the regulatory and the public side, I'm curious, how do you mentioned that only 1 in 5 companies see that regulation is a barrier, but it's becoming less this day, and more people starting to navigate through like compliance. Curious how M0 help companies navigate compliance across different countries and regulations, and how do you maintain the decentralized principle while like help companies on compliance side?
Yes. So there has been a lot of discussion about regulation and compliance in crypto, which is kind of like monolithic, but is a bit more nuanced, obviously. In my opinion, there have been mainly three drivers of discussions on the regulatory side in crypto. The one is as AML and compliance, anti-money laundering and compliance. The other one has been um, issuance of money, like let's say like money transmission, whether the banking world, how it impacts the banking world, and the other one has been securities, SEC securities, customer protection. I think that all those aspects will require a lot of innovation on the regulatory front. The IML and compliant, the IML one is actually the easiest because most people who are not familiar with crypto, they think that crypto is very good to launder money. Crypto is very bad to launder money because you can see everything that people do around the blockchain. It's way easier to do the bad things through traditional rails or through cash than crypto. So there has been a lot of evolution here on tooling to do good AML and compliance in crypto will continue to be like this. And our modular approach in M0 is facilitating actually onboarding those tools on our stack. We're already doing it for some partners. On the big innovation though, the security is part of customer protection is still in flux. I think regulatory changes will come very soon. But the big change I have seen has been on the money transmission banking side. Up to recently, in some of the largest geographies, issuing stablecoins was a banking only activity. So you ultimately needed to have a partner bank behind the scenes that was managing the reserves and that was managing the entirety of the yield. This is horrible. It's horrible because it's giving so much exposure to the customer. You don't know what type of counterparty risk you have, and ultimately it's something that has been done to protect traditional banks rather than be a friend of the customer and the innovation. There is also a positive side. If stable coins are absorbing a lot of liquidity, they can create problems for banks, and your regulators want to make sure, and for the economy, regulators want to make sure that this transition is smooth. But certain areas have been more protectionist than others. Europe has been very, very protectionist. The MiCA legislation has been not great for stablecoin builders. The previous administration, US, has been very protectionist as well across the board. But now we're seeing a lot of pro-crypto stance. So even in the US, the Genius Act or the Genius-related bills are really allowing stablecoin issuance from a first principle perspective. That's why we are entering the US market very soon. And also there is a different stance and posture from large countries towards crypto as a sector, right? It was very difficult to build in the crypto sector in the US, and the US is a big market, right? So very recently, because it was just difficult, right? Like the regulators were trying to make your life difficult, and has changed, right? Like the regulators now trying to do their job, but they're way more pro innovation, which is a good thing, right? I don't have political affiliations whatsoever. I'm just saying what I see from a builder perspective. And I personally think that the more this business matures, the more we will see constructive relationships with regulators. We're seeing this in the US, we're seeing this in South America, we're seeing this in certain countries in Southeast Asia and the Middle East. Europe is still behind. I'm European, so I can criticize Europe. Europe is always behind when it comes to regulation. But I think this is a trend. So the vibe, the environment from a regulatory risk perspective has significantly improved over the last 6 to 12 months, like massively.
Yeah. I think we at the last 5 minutes of this session. So I want to wrap up by hearing about the upcoming product launches, partnerships, or any exciting milestone that you have that you can share with the audience today. What should we be watching for?
Yeah, so as I mentioned, M0 wants to democratize digital money control and give the possibility to anyone to build cool financial applications and control entirely the digital dollars they manipulate, right? We are convinced that tech and fintech are merging, and behind fintech, there will be crypto rails. Most of the financial technology will be non-custodial, and we wanna power most of it. That means that we are agnostic when it comes to the use cases that are built on top of M0. We launched a few months ago, and we already reached almost $300 million of float with two partners, right? One is a DeFi protocol. The other one is an issuer of stablecoins for the Cosmos ecosystem, which is a large crypto ecosystem, actually very prevalent in Far East Asia, in Korea especially. We have 30 more partners coming online over the next few months. So we have builders building stablecoins for the Hyperliquid ecosystem, which is Hyperliquid is one of the largest perpetual exchanges, decentralized exchanges in the world, the largest decentralized exchanges for perps in the world. We have credit card issuers like Cast building on M0 stack. We have gaming, open source gaming platforms like Playtron, building their digital wallets on M0 stack. We have large distribution networks that we cannot still announce, but I think there are a long list of players that are building a lot of cool financial applications. Ultimately, the end users will not know we exist. They will just interact with the front end to do very cool things and to send money or to store money or invest it or buy things. And behind the scenes, this will be powered by M0. So that it's very exciting times for the sector and very exciting times for us as a company.
Yeah, we're excited to see all those exciting innovation coming out of M0 as well. Thank you so much, Luca, for today. Very insightful session. Yeah. Thank you
for
so
having
much.
me. Thank you.